Hello, introduce yourself. Name Amelia Putri. Class AKT to 3A. NPM 23,411,027. Today I will explain about ethics and behavior in accounting. Definition of ethics in accounting. Ethics in accounting is a set of moral principles and values that become guidelines for accountants in carrying out their duties honestly, fairly, and responsibly. This ethics regulates how an accountant should behave in compiling, presenting, and reporting financial information. In practice, accounting is not only about counting numbers, but also related to trust. Financial statements made by accountants will be used by many parties, such as managers, investors, and the government, so they must be prepared with full integrity. Definition of behavior in accounting. Behavior in accounting is related to how human behavior affects the accounting process. This includes attitudes, motivations, pressure, and decisions taken by individuals in the organization. That is, the results of financial statements are not only influenced by the system and rules, but also by the behavior of the people who compile them. For example, an accountant who is under pressure can manipulate data. The relationship between ethics and behavior. Ethics and behavior in accounting have a very close relationship. Ethics serves as a guideline on what is right and wrong, while behavior shows how a person really acts in practice. If someone has a good understanding of ethics, then his behavior also tends to be positive. On the other hand, if ethics is ignored, then the behavior that appears can be detrimental, such as cheating or abuse of authority. Principles of accounting ethics. Some of the main principles in accounting ethics include integrity. Accountants must be honest and not manipulate data. Example, not changing the report number for personal or company benefit. B. Objectivity. Accountants must be neutral and impartial. Example, not affected by pressure from superiors in preparing reports. C. Professional competence. Accountants must have adequate knowledge and skills. Example, understand the applicable accounting standards. D. Confidentiality. Accountants must maintain the company's important information. Example, not leaking financial data to outside parties. E. Professional behavior. Accountants must act according to the rules and maintain the good name of the profession. Example, do not do anything that undermines public trust. Factors that affect behavior in accounting. Accountant behavior in practice can be influenced by various factors, including pressure from superiors gives to achieve certain targets. Bonus or incentive system gives encourage manipulation to look accomplished. Work environment gives unhealthy organizational culture. Personal value gives level of honesty and individual responsibility. Weak supervision opens the opportunity for fraud. Forms of ethical deviation in accounting. Some examples of ethical violations that often occur. Financial statement manipulation. Change the data to make it look better than the actual condition. Fraud. Abuse of assets or information for personal gain. Conflict of interest. Make decisions that benefit yourself. Hiding important information. Does not disclose data that the report user should know. The impact of ethical violation. Ethical violations in accounting can have a big impact, such as loss of public trust, financial loss for the company, damage to the organization's reputation, legal sanctions for perpetrators, company bankruptcy in extreme cases. The importance of ethics in the accounting world. Ethics is very important because maintaining the trust of financial report users, prevent the occurrence of cheating, help create a healthy work environment, supporting organizational sustainability. Without ethics, accounting information will not be trusted. Efforts to improve ethics and behavior of accountants. Some steps that can be done. Applying the professional code of ethics, providing routine ethics training, improving the supervision and audit system, building an honest organizational culture, giving strict sanctions against violations. Conclusion. Ethics and conduct in accounting are two things that are interrelated and cannot be separated. Ethics provides guidelines on what is right, while behavior shows how those guidelines are applied in practice. By applying good ethics and understanding behavioral factors, accounting can be carried out honestly, transparently, and trustworthy, thus providing benefits for all interested parties.